Hello, everyone out there in podcast world. Hope you're having a great day. You're listening to the Service Business Mastery Podcast. I'm your host, Tersh Blissett. So many of you know that I've become friends with Mike Michalowicz after reading his book and listening to his book, Profit First. Some people in the audience, some of the listeners, and some of my friends have had some situations and issues with trying to get that book and the processes and procedures related to Profit First to mesh with the contractor side. I get questions a lot about what percentages and how to set that kind of stuff up. And a lot of times I'll push them towards the professionals, the accountants who work with the Profit First professionals and everything like that. But then somebody decided to answer lots of questions that constantly get asked and have put an entirely new twist on the whole Profit First mentality. So I'm so thankful for that. And today we have that person on our show. And I just want to say welcome to Shawn Van Dyke. And he actually wrote the book Profit First for Contractors, which is right up our alley. Most of us all here that are listening to the show are contractors. So this is a much needed twist on the book for our industry. So welcome to the show, Shawn.
Oh, Tersh, thanks for having me. It's so great to be here.
Yes, it's my pleasure. Tell us a little bit about yourself.
Gosh, many, many years ago. It's probably over 20 years ago. That's how old I am. I'm about to turn 45. So I graduated college with a couple of degrees in engineering and civil engineering, structural engineering. So did that route for several years and then realized as an engineer, I can kind of make fun of engineers since I used to be one. I didn't really know how to build anything. So I wanted to get out in the field and learn more on the construction side. So started to work for large commercial general contractors as a project manager. Did that for several years, then just kept on going and getting different jobs in the industry. Eventually worked for some architectural firms and then landed a job as a construction manager with a real estate developer. Loved that job. I got to travel all over the country building commercial properties. But by then we had a couple of kids already and maybe another one on the way. We have 5 now. So
Yeah.
my wife was like, me being on the road 3 or 4 days a week wasn't really going to be real conducive to me being a good dad and a good husband. So I quit that job and started my own real estate development and construction management firm so I could do more things in and around Knoxville, Tennessee. That's where I live. I did that for several years, and then the economy tanked and made a pivot and started a remodeling company, a general contracting company. Did that for several years, and then partnered up with a friend of mine who was my trim and millwork subcontractor, and he had a booming business and was really growing, and he needed somebody to come in and help him run the business side of it. So I joined him as a COO and ran that trim and millwork company for about 4 years. And then kind of looking back on all that experience, just over the years, you start answering the same questions and solving the same problems for a lot of my friends and just people within my network that would ask me questions as it related to the construction industry and running a business. And then I just kind of had this epiphany one day that I thought, well, maybe I can go out and do this for, instead of just one business, I can do it for a lot of businesses. So again, told my wife I'm quitting my job again and going to go start another business. And by this time she was used to it. She was like, yeah, whatever. I don't care. We got 5 kids at this point. Whatever you need to do, just keep the lights on. And so then I started this consulting and coaching business, what I do now, and had been doing this for a few years. And along the way, I came across Profit First and Mike's other writings and just realized that it was exactly what I teach my clients. And it's kind of how I had been running my business because I don't have a business background. I didn't go to business school. I don't have an MBA. I just figured out a lot of the financial stuff from the construction side by spending hours and hours staring at a profit and loss statement and the balance sheet, trying to figure out what it all meant. And so I kind of came up with these hacks around figuring out how to manage the cash and how it all worked. And then when I read Profit First, I was like, yeah, this is exactly what I've been doing. It's just written better. And Mike can tell it in a very funny way. And so that was really the start for me down the Profit First professional road. So I got certified through Mike's program as a Profit First professional. And then a few conversations later, I was talking with Mike saying, the construction industry needs this. And I told him, I was like, this is how I would change your book. He thought it was great. He was really open to the idea. And I said, Mike, you should write this book. And here's how you would tweak it for the construction industry. And Mike just said, well, why don't you do it? I said, okay. I didn't know I could do that. So we worked out a deal. And then here we are at this point now. The book is out there. So that's my experience all the way through, kind of in a nutshell, how this book happened.
Yeah, Mike's the master of delegation. So
Yeah, he really is.
he pumpkin planned it.
Yeah. And he's got other folks. So what this book is they call it as a derivative copy. There's also Profit First for e-commerce. That book just came out. And then there's a couple other books in the works for industry specific Profit First. So it's pretty exciting to be part of that brand.
That is really cool. Yeah. A couple of weeks back, I went up to Mike's place for a meet and greet and kind of a brain dump on his next book that he's writing.
Yeah.
He was getting feedback on it and everything. It's really exciting. His mind never stops. He's always trying to figure out a way to help out entrepreneurs grow.
Was really excited about working with him and I even put that in the acknowledgments in the book, is that his passion for helping out entrepreneurs is really contagious. So that's what was really exciting for me.
Absolutely. So I picked it up on audio version because I drive so much that typically the best way for me to consume the content is through audio. So I was very thankful that you put out the audio book on that. So tell our audience a little bit about the book so that in case they haven't heard it before or read it or seen it or anywhere, tell us a little bit about the book. I like how you've taken and associated dieting with the way it works and kind of put that little twist on it too.
So for people that aren't familiar with the Profit First system in general, what it is a cash management plan or a cash management strategy for managing the cash in your business. And this is where a lot of people make a mistake in their thinking or viewing it, is they think that it replaces the accounting system, and it doesn't do that. And Mike has described this before as Profit First is a cash management system. It's like a filter that sits on top of your accounting system. And what Profit First does is we manage the cash as it comes in. When it comes into the business, we manage it so that we know how it's going out of the business. So the way that it comes in, still that has to be reconciled in our accounting. That's the accounting part. And then the way it goes out of the business needs to be reconciled through the accounting system. But while it's in the business, we're going to manage it in a certain way. And we do that by setting up bank accounts for the way that we need to look at the money within our business. And the way that it relates to dieting, and I tell a story in the book, is that a few years ago, my wife and I, she had the great idea to put us on the Whole30 plan, which is not really a diet. It's more of a nutritional plan, and you clean out all of the junk that you're eating in your diet and you slowly add things back in. But while you're cleaning all that stuff out, it eliminates sugar and gluten and carbs and all of this kind of stuff. But what you can eat or drink is meat, fish, eggs, vegetables, and I think that's about it. And then you can drink water, coffee, or unsweetened tea. That's basically it. And when you boil your diet or your nutrition plan down to those things, even though it can be painful at first, it makes it a lot easier to lose weight. Even though it's not a weight loss thing, you're going to be eating better. You're going to be losing some weight, but it just makes it a lot easier to see all of the stuff that's going into your body. And you become very aware of how other things that you were eating were affecting your body. So kind of make the example in the book that if you want to lose weight, you got to clean out the pantry. You got to get rid of all of the junk. And then you got to look at the things that you spend money on in your business in a very categorized way. And you just kind of give yourself some limits, meaning we're going to set up an income account, and that's where the money's going to come in. And then the most important thing in every business is profit. So we're going to set up a profit account, and we're going to deal with taking our profits first and setting that cash, that money aside in a separate bank account. And then in the United States of America, when you have profit, you're going to pay taxes on it. So you need to set that money aside as well in a bank account so that you can see, okay, when taxes are due, I've got that money available. Then we're going to take care of the most important employee. That's the owner. So a lot of construction business owners aren't paying themselves. If they pay themselves anything, they aren't paying themselves enough for the value that they are producing or putting into their business. So we set up an owner's comp account. And then the last account is the operations account or the OPEX account. And that's one of the key accounts. When we've taken care of all the other important things in our business, then we look at this bank account and we see there's a certain amount of money in there to operate our business in the OPEX account. After we've taken care of the most important things, the profit, the taxes, the owner's comp, if there's not enough money left in that operations account and that OPEX account to run the business, that is your business screaming at you, telling you have to do something different.
Change your prices.
Yeah, but it's not, you don't take it from the most important employee.
Yes.
Take it from the owner's comp. You don't take it from the most important thing of the reason that you're in business is to make a profit. And when you make a profit, you're going to pay taxes on it. So it just gives you a way to view the cash in your business. And it becomes a lot, I shouldn't say easier. It's not easy, but it does simplify it. It's profoundly simple. And when you look at it, and when you look at your bank accounts and the amount of money that you have in those separate areas, then it becomes much simpler to view and say, oh my gosh, I don't have enough to pay my bills. I need to operate my business differently. I need to raise my prices. I need to increase my margins by maybe raising prices and becoming more efficient. And then I also got to take a look at my expenses. Maybe I just have too many expenses. And that's where I find a lot of contractors when I work with them and they say, Shawn, we got cash flow problems. The first question I ask them, I said, okay, are you looking at your expenses every single month? And the answer is always no.
Right.
Because you got all of those little expenses and they add up over time. And as we describe in the book, in Profit First for Contractors, is when you got all this money in one account, then when you get that deposit check, you get that money coming in, then you feel a sense of relief like, oh, good. There's money in the account now. We can go spend it. And then you spend it. And then when there's money not in the account, it's called bank balance accounting. You look at the bank balance, and we all do this. We say, oh, there's no money in the account, or there's very little money in the account. I'm going to cut back on my expenses. I'm going to stop going to Starbucks. For me, it was always Subway. Like there was a Subway close to the shop, man. When I had money, it was like, I'm getting the foot long. But when I didn't have money in the account, I was like, I think I can skip today. I think I can get by on a handful of peanuts. But that's how we kind of operate our business. So doing Profit First forces you to look at the money so it's not all lumped together. And it tells you very specifically about what it is you need to change in your business.
So how often do you recommend allocating the funds over to different accounts? Do you do it once a month or once a week, or whenever you deposit a check, you immediately do it? Or how do you do that?
When you get started, you have to develop a rhythm. And the rhythm we talk about in the book, and it's the same in Profit First as it is Profit First for Contractors, or I may say PFC for short, Profit First for Contractors, is really a twice a month rhythm. And we call it the 10th and 25th rule. So we're going to let the income come into the account. We're going to deposit all of those checks. And then on the 10th of the month, we're going to take whatever's in the income account. We're going to zero out that income account twice a month. So let's say that you, from the beginning of January 1st to January 10th, you receive $50,000. So then we're going to take that $50,000 in income and we're going to split it up into the various accounts. The income account is just kind of a pass-through account. So we split that up to all of the other accounts based on some percentages. And we talked a little bit about how we set those up. And then that's it. And then we're going to pay our bills on the 10th. And then we're going to do that again in about 2 weeks on the 25th. Now, there's no set dates of the 10th and 25th, but they're about 2 weeks apart. And in the construction industry, a lot of times you'll get certain discounts or if you pay by the 10th of the month for your suppliers and that kind of stuff. So it helps establish a rhythm. So I recommend doing it twice a month on the 10th and 25th. So on the 25th, you're going to look back at the income from the 11th to the 25th, and then you're going to make those disbursements, and then you're going to pay your bills. And then on the next round, you're going to look from the 26th of the previous month to the 10th of the current month and do that again. Now, when you first get started and you've got bills all over the place and you've got these habits, it's going to take some time to kind of get into that rhythm. And you might find that your rhythm might be better the 15th and the 30th or something like that. A lot of folks will jump in once they get the bank account set up, then they start doing it with every check.
Right.
Like, oh, we got a check today. We'll do our allocations. We got another check in a couple other days. A couple days from now, we'll do it again, which I understand it's exciting to kind of see how it all works. But you got to take a deep breath, step back from it and say, okay, this is the long game here. Let that income build up over that 2 week period. And what you'll see is you'll start to see trends of cash flow coming into the business. If we do it more often than twice a month, then we may not see those trends that are going to help us run the business. So I recommend just doing it twice a month, the 10th and 25th.
Yeah, I like that. And so I implemented Profit First as soon as I first read the book, and I started up the business with Profit First. I had all the different bank accounts and everything. And then I was guilty of that. Like as soon as you get a check or you deposit a handful of checks, and then all of a sudden you're like, okay, let me go ahead and disperse this. Let me go ahead and split these percentages up. And then after a while, it got overwhelming. And then I reached out to Mike and he was like, no, man, you remember me talking about this. Just do it the 10th and the 25th. And I was like, oh, yes. But what about some of your bills that are just going to fall like on the 20th? Like you have to pay it on the 20th, but you need to wait till the 25th. He said, either pay it early or talk to your people and get them to change the date when it's due. Or, like you said, change it to the 1st and the 15th. But he said that he's found that the 10th and the 25th have worked the best.
Yeah, I find that I get a lot of emails from folks now that are implementing, and it is when you kind of rip off the Band-Aid and you realize how simple it is, then people go and they set up the bank accounts and then they start moving money around and they start moving a lot of money around. And I'm saying, that's what I say in the book is like, no, start small. And they'll say, well, I need to pay this bill and this bill. That's why I say, give yourself some time to kind of roll this thing out over a quarter or 6 months of the year. Tweak it. It's the same thing as dieting. The reason that we were successful, my wife and I were successful in Whole30 is because we picked a date out in the future, months before we were going to start it. And we tested some recipes. We started changing, just getting rid of certain things and stopped buying certain types of food. And then we played around with some recipes so that when we picked the date, I think we started on July. So we were going to say, okay, July 1st to July 30th or whatever. That was going to be our 30 days. We had already practiced some of these things for a couple of months leading up to it. A lot of people will go into Whole30 and they'll say, okay, I can't have any sugar. I can't have any carbs. So I'm going to eat pizza, Chinese food, and ice cream the day before. And then it's a shock to your system.
Absolutely.
I've received some emails, which are wonderful, but I've received some emails from some contractors that said, I'm sitting in the parking lot of the bank right now. I just set up my accounts and I'm getting ready to make the transfers as soon as I get home in front of the computer and all that kind of stuff. And I said, that is awesome, but start small. Just move 1% over, develop a rollout plan. You got yourself into this mess over years and years of doing things. I wouldn't say incorrectly. It's how everybody's doing them, but you're not going to change it overnight. But it's been pretty funny to get the first email where someone said, how I'm sitting in the parking lot of the bank. I thought, oh, that's kind of cool. Yeah. And then I got more and more emails of people sending me emails from the parking lot of the bank. And I thought, oh, this is getting to be kind of funny now.
That is funny because that's exactly how I felt too. And then whenever you first go into the bank and you're like, yes, so I need 5 checking accounts. And then the bank teller's like, I don't think we're going to do that. I don't know how that happened.
Money laundering is illegal. That sounds like what it kind of is. It's funny. And I've received some emails too, where folks have gone into the bank and they've said, I want to set up these different accounts. And the bank teller was like, yeah, somebody was in here just yesterday. They wanted to do the same thing.
That's funny.
Yeah. It's kind of funny to profit first can be kind of a small world.
So tell me a little bit about your percentage that you would start out with your profit, because a lot of people that are listening don't even know what their profit is. Like they think that their gross profit margin, that sometimes they mix up gross profit and net profit, and they don't understand that this is going to be your net profit. And so they're like, I do 15% profit. And so they immediately want to go to the 15% mark. And then whenever they start doing all their numbers, they're like, oh man, I'm like 14% off here.
Yeah. So that's why I talk about in the book about doing a rollout plan. And it doesn't matter really what your profit is to begin with. You're probably, if you haven't studied it and you don't know how to read the financial statements, it's not what you think it is. So that's why it's just it's simple. Just start with 1% for your profit anyway.
And how often do you recommend going up?
Once a quarter. It really depends, but if you really aren't sure about your profits, then that's why we say start with 1%. You're not going to miss it. You won't miss that money at all. So if there's $10,000 in your bank account, your one bank account right now, and you go and you set up all your different accounts, you're going to transfer 1% of that $10,000 into your profit account. And it's so small. That's where people are like, well, that's not enough. That's no big deal. That's exactly the point. 1% is not that big of a deal. If you can operate your business off of $10,000, you can operate your business off of $9,900. So we're going to move just 1% over to get it started. I'd say just stick with that for the first quarter of the year for 3 months. And then you're not going to miss that. You're not going to miss 1%. Then for the next quarter, bump it up to 2%. 2% you're probably not going to miss. We just want to set up the habit. By the third quarter, and this is where I find most contractors when we start working together, if they're making any money, they might be topping out at around 3% net profit. But by this time, 6 months of getting into this rhythm and looking at your money in this way, then you're going to be to about 3%, where you're going to start pulling in profits. And if you haven't changed anything in your business, that's where things are going to start to get tight. But setting up these habits and looking at your money like this, you're going to start seeing these things, these trends and other things already coming. So you're probably not going to have as a hard time getting to 3%. Once you get to 3%, you're probably, if cash is tight or money is tight, you're going to be very aware of what it is, whether it's expenses, you're not charging enough, and other things that are affecting the business. And then you can start make changes. So by the fourth quarter, you might be able to jump up to 5%. So we do a 2% increase. And then I just encourage contractors to keep going with that and adding 1% every quarter until you reach that kind of magical area between 8 to 10% net profit. And that's a really good rule of thumb. If I'm looking at a construction company of any size, really, whether it's small or a larger construction company, if you're somewhere around 8 to 10% net profit before taxes, that's the sign of a healthy construction company. And you can get there. It's going to take a year, 4 quarters, or maybe even 6 or 18 months. But I mean, the next 18 months are going to fly by.
Oh, they do. So fast.
That's kind of how I recommend is no matter what you're doing, unless you are very confident in your numbers and you know that year over the past few years, we've made, after the owner considers his or her pay and taxes and that kind of stuff, if you know that you have been making a 5% net profit, let's say after taxes, then you should have no problem starting at 5%. But most people read the book, they get really excited. They see, oh, my accountant says I'm making 10%. I see that number at the bottom of the profit and loss statement, but they don't realize that their compensation, because they pulled it out in owner's draws, don't show up there. So they go and set up their profit account, pull out 10%, and then whammo, the first month, they're like, I don't have any money in my OPEX account. So what do? They go pull money out of the profit account and dump it in there to pay bills. And then that establishes the wrong habit. Once money goes into the profit account, you don't touch it unless it's coming out, going to the owner as what it actually is, profits for risking your whole life and livelihood of running this business. It doesn't go back to pay bills. So that's why I recommend developing a rollout plan over 4 quarters at least, if not 6 or 8 quarters, starting at 1% and then going up 1%, at least in the profit account as you move forward.
That was the biggest thing that I took away from both books, is the fact that we all see that, especially if you're not an accountant or a bookkeeper, and so you don't really know the terminology, because they mix and mingle a lot of terminologies in there, and it can confuse a lot of guys, especially guys like us that we're just AC guys that work out in the field and fix air conditioning units. And you start talking net profit over gross profit, and then margins and markup and all these other different numbers. And somebody might say, we have a 20% gross profit. Then they're like, okay, well, let's just put 20% into the profit account. Like, yeah, no, you're going to change that back. And then that's going to deflate your whole thought process with it. And then you're going to be like, no, this system doesn't work. This is broken. I'm not going to use it. So
yeah,
I definitely recommend you start out, like you said, at the 1% mark.
Yeah, I have a lot of contractors when they call me and they're looking for help and we're talking about my different coaching programs or whatever. When they say, well, Shawn, I don't really understand it. I'm making 23% net profit. And I said, okay, then I have a couple of questions for you. How many investors do you have lined up knocking down your door to buy your company? Because that's an incredible return. That's beating the stock market. And they say, well, okay, no, and it's a little tongue in cheek. Then I say, okay, if you're making a 23% net profit, then why are you calling me? My guess is you don't have any cash. So that number, that 23%, isn't actually accurate. And a lot of contractors and business owners are so used to seeing that number and not understanding what it actually means that they're kind of tied to it, saying, no, this is what my accountant said. This is what, and I say, I know it's what your accountant said, but your accountant is wrong. And I write about that in the book, and Mike mentions it in his too. If your accountant can't explain to you how a construction company makes a profit, then you need to find a new accountant, because lots of accountants do not have profitable clients. They have clients that they charge a fee to help them file their taxes. That's it. They're really not. Now, don't get me wrong. There are plenty of CPAs out there that are good business consultants. They understand that. But I've even written a couple of articles on this before, but if you hired your CPA and you think you have someone that's going to help you run your business or at least consult with you on your business, but what the CPA is really just hired to do is just to file your taxes for tax liability. Those are two completely different things. You can send your CPA a bunch of garbage and they'll plug it into the tax forms and say, according to your garbage, but see, they won't know it's garbage. They only have what you give them.
Right.
They're going to say, based on this garbage, this is what you need to pay the government. And that cycle repeats itself. They've never even really got an opportunity to consult. So that's why I always say, hire your CPA to fill out your taxes and do your tax liability filings, but also ask them about additional services. Have them drop in and look at the books. And if they can't explain to you how a contractor makes money, then you need to find a CPA that understands the construction industry, because there's plenty of them out there and they're really good.
Oh, yeah. They'll work remotely too. So if you're listening to it and you're not near someone who can do it, like I hear it a lot, like we live out in a small town way out in the country. So we don't have that awesome CPA or bookkeeper that we can use. There's a whole system of people that will work remotely.
Oh, yeah. I mean, that's Profit First Professionals. You can check them out. They're all certified accountants, bookkeepers, or coaches like myself. And because people will come to me and say, okay, I got to get rid of my CPA or I need a new bookkeeper. And they're kind of trapped in this mentality of they've got that person that was recommended to them by their
aunt,
cousin's brother or something like that. But yeah, these days, it's all virtual. They don't have to be in your town. In fact, one of the bookkeepers that I work very closely with, and she serves a lot of my clients, she's in Orlando and she's serving clients all over the United States.
Absolutely.
There's a time zone thing to get over sometimes when you communicate with them. But nowadays, yeah, that bookkeeper, that CPA does not have to be in your town. I mean, it's convenient every now and then if you need to pop in and see them. But same thing with like what we're doing and how I coach my clients is I do use video calls. I know a lot of CPAs and bookkeepers now, it's easier to meet face to face on a video call. I mean, heck, now my CPA, his office is 10 minutes from here. I've known the guy forever. And we just had a meeting yesterday, but I didn't run down to his office. We just did a video call.
That's funny. So like you're right next to him and you still did a video call.
Yeah. I've had assistants that work for me, live in the same town. I mean, there's something that human interaction, don't get me wrong, but
right.
These days with video, it's just so easy and so convenient. And it's like I've got my operations manager, full-time employee of mine. She lives in California.
Very nice.
But she doesn't need to be here. We just have to get over the time difference of what her workday is and when mine is. But other than that, and that's the way the world is going. So if you think you have to have that CPA, or you're having trouble finding a CPA or a bookkeeper in your town, you're just not thinking big enough. There are so many good ones out there. They're just a video chat away. So
100%. About this time last year, I interviewed Craig Cody. He's the CPA out of New York. He does things a little bit different than your normal CPAs. He requires an interview process where he interviews all of his clients before he takes them on. So he sees it as an investment that the CPA shouldn't cost you money is his mentality.
Yeah.
If he's not helping you save money or make money in certain areas, then he's a waste of money.
Yeah, exactly. That's what your CPA should be, making you money.
Right. It's so hard. You see them as an expense line item on your reports, but they definitely should be making you money for sure.
Yeah, that's one of those accounting terms that I hate. And this will be one of those things I'll piss CPAs off or whatever. But I hate the term overhead, because contractors, I understand that we see that and we're like, oh, this is an overhead expense. And I say, again, this is where CPAs will hate me. There really isn't an overhead expense. The reason that you have a cell phone would be an overhead expense. But the reason you have a cell phone is because it makes your work more productive. So you can actually call people and you don't have to meet in person with them, right? So you should make money with your cell phone. You have a computer, a laptop, an iPad, whatever. Sure, that's an overhead expense, but you should be using that tool to make money. You've got an office, or you have health benefits or 401k plan for your employees, whatever. Yeah, sure, all of those things are overhead expenses, but really you have them because they bring in the right people, and you have the right people working for you. You make a profit on them. So everything in your business, even though we may classify it as an overhead expense, you should be making money on it.
It almost sounds like if it truly is an overhead expense, it's something you need to get rid of because it's not making you money.
Yeah, that's right. I mean, there's different seasons and cycles within a business. You might determine that, oh, this piece of equipment that used to make us money is now costing us money because of whatever reason, maintenance or something like that. But yeah, you're right. We need to evaluate that, take a look at it. And then we may have some expenses that we need to spend some money on, and they're not going to be immediately profitable because there's some recovery time or there's some implementation. So in that classic sense, we're not always going to be making money on our overhead expenses. But a lot of times the contractors, and I know because I was there myself, you think about hiring that administrative person, like, that's an overhead expense. I don't know how I paid for that. You pay for that because your invoices are going to be more accurate. Your contracts are going to be organized, and you're going to get your time back. Someone's actually going to be available to schedule your time or call that customer back. And that will increase what you can charge. That increases the value.
Or your client will be more satisfied, which they're going to sell for you.
Exactly.
Sweet. So thank you for coming on the podcast and sharing all your information with us. If somebody wants to reach out to you, what's the best way for them to reach out to you?
Yeah, if they haven't bought the book, they're interested in the book, you can go to profitfirstcontractor.com and you can purchase the book there. And at that website, you also can get free downloads of all of the graphs and figures and tables in the book. And if you put in your email address there, there's a section to give me your email address, then you can get some additional resources, just kind of some tools and some tips and some training there. I'll send you an email on how to download what I call the PFC toolbox. So that's really the best place is the profitfirstcontractor.com. And you can get the book on Amazon, on Kindle, on Audible for the audio version, and even on iTunes as well. And then if you got any questions, you can always follow up with me through my website at ShawnVanDyke.com. That's SHAWN Van Dyke, VANDYKE.com. And I've got another free book there. It's called The Paperwork Punch List, 28 Days to Streamline Your Construction Business. If you want to sign up, I'll send you an email. And that's been a pretty popular book. That's an ebook that I wrote a couple of years ago. So you can get that. And that really gets into more of the systems for a construction company. And as always, you can follow me on Instagram at Shawn Van Dyke. I'm also on Instagram at Profit First Contractor. YouTube, SoundCloud, all sorts of things. Just type Shawn Van Dyke, SHAWN, into Google, and you should be able to find me. And if anybody's got any questions, then you can get my email address, which is connect@ShawnVanDyke.com, CONNECT. The reason I didn't do Shawn at ShawnVanDyke.com is because I knew a lot of people spell it differently. And so I knew I would miss a lot of emails that way. But that's the best way to get a hold of me.
It's funny you mentioned the misspelling portion of it. So I have where everybody sends their resumes to. For me personally, it's careers@icebound.us for my personal business. And I've got it some cloned names so that it still sends to the same account, but I've got careers misspelled and then career without an S. And so because I figure so many people are going to do it all different kinds of ways, rather than missing an email, I have it cloned so that it still sends it there.
Yeah, I've got a couple of, I don't know if I've got it pointed there yet, but I think I've got ShawnVanDyke.com, SEAN in it.
Yeah, there you go.
I didn't go Profit First for Contractors because I didn't want the word for in there. People will misspell for, FOUR, or is it the number or what? So I thought, how do we make that as short as possible? Profit First Contractor. But I do have a couple of other versions, misspellings and that kind of stuff that do point back to profitfirstcontractor.com. So it's kind of funny that you mentioned that because these days it's not just your domain. You need to grab all the stuff around it, including the misspellings.
Exactly. Cool, man. Well, I appreciate it again. Thank you so much. And keep up the good work on the Instagram. That's where we connected. And you always put out some great content on there.
Oh, thanks, man. I really appreciate it. And be happy to come back anytime.
Absolutely. Until next time, be good. We'll talk to you soon.
All right. We'll see you soon.
Thanks for listening to the Service Business Mastery Podcast. I'm Brian Orr. This podcast is a proud member of the Blue Collar Roots Network, and you can find out more by going to bluecollarroots.com. You can also listen to this podcast at bluecollarroots.com. The best way to listen to a podcast is by doing so on an application on your phone, an app on your phone. So if you have an Apple phone, an iPhone, then you can use the little purple tower right on your phone called the podcast app and listen to this podcast anytime just by typing in Service Business Mastery in the search bar and hitting subscribe. Similar process if you are on an Android device. Either download the Stitcher app, you can do it there. You can also do it within the Google Play Store and just type in Service Business Mastery, hit subscribe, and then you won't miss any of the future episodes. Also, if you're willing, reviews in the podcast app or in iTunes really help the podcast grow. So if you enjoy what you hear here, then go on the podcast app and leave us a review. Thanks for listening, and we will see you next time on the Service Business Mastery Podcast.